Hi, everybody. We do have with us today Mr. Michael Williams, which is chairman of the board of Williams McLeod Capital. And Mr. Williams is also president of Full Metal Zinc. Mr. Williams, good day.
Good afternoon.
And okay, can you talk about McLeod Williams first, so we know a little bit more about the company? You are trying to find money for small cap.
Well, McLeod Williams is essentially what we would call a mining incubator, where we source projects all over the world, and then we put mining teams together to advance those projects, be it exploration or, if the case warrants, through development. And my partner in the company, Rob McLeod, handles the geological side, and my responsibilities within the group is for the financial aspects.
So you're not involved only in the money, you're involved in finding teams that can work together, so human resources as well.
Well, you know, the toughest commodity to find really is people.
Yeah.
And to find exploration geologists that are capable of making discoveries is exceedingly hard to find.
Especially now with all of those projects that are going on in the whole world.
What we've become, when I say we, the junior mining industry, we're the de facto exploration arms of the major companies. They're willing to allow us to go make the discovery, and they will pay a premium in order to buy our company should we find something that they deem to be an economic ore body that they could add to their reserves eventually.
So your goal is not to find the resources and build a mine and exploit it. So you're trying to make small cap growing and build the portfolio resources and then sell it?
Well, our model is this. First and foremost, our technical people, we need to make the discoveries, or certainly advance the discovery using economic geology. At that point, we have a decision. Do we go to put it into production ourselves? And we have to be capable of doing it, because if we're not capable of doing it, the major companies will sit back and wait for you to flounder and then come in and pick your assets up. But it depends on the ore body. In some cases, we would put it into production ourselves. We just bring on a different management team, more engineering based and with operating experience, and we would take a back seat. But I think in this day and age, what you're going to see is companies like us make discoveries or advance projects to the point where they're economic. You will get the major companies or the mid-tier producers, because there's a lack of assets and new assets that have been discovered wanting to make offers for those companies. That's our preferred model.
Okay. And but you're here today to talk more about one specific company, which is Full Metal Zinc.
Correct, yeah.
Where are you at in this company so far? Because right now the stock is sitting around 12 cents, was 45. It's a straight downward bearish trend so far. So I presume the company did not have the money. And have you found money for that?
We're in the process of doing a financing for Full Metal Zinc. We do have money in our treasury enough to carry out this year's drill programs. Full Metal Zinc is a company we formed last year, and our thinking was this. We're bullish on the zinc price itself, and zinc is a commodity. What I can't tell you is when I expect the zinc price to begin to increase, but I can tell you this, and I think most people in the space are of the same opinion. Zinc will go up, it will go up significantly, and then it'll find a level that's sustainable. It won't be 80 or 90 cents forever. There's two issues at hand.
What was the price of the highest price of the zinc?
Previously it's hit $2.
$2, and now it is at?
About 95 cents.
Okay, so half price.
But what I think is going to happen, there's two things at play here. One is the demand. The demand coming out of Asia is still increasing, and it's expected to, even with the current downturn in the economy. The second is the supply issue. We are not finding new deposits. It's exceedingly hard to put deposits into production, and some of the older deposits that have been around for 10, 15 years are coming off stream. They've run out of ore, and two of the biggest, Brunswick in Canada and Century in Australia, within the next couple of years, they won't be producing any more zinc. That is going to impact the price also. So what we're trying to do is position Full Metal Zinc for when that spike and then the higher price occurs, that we have our assets in line, and we're just in the process of making acquisitions and moving the company forward. We do have the mining team in place to do it, though.
And where is this claim resources? Do you have one or many claims?
No, right now we have one ore body, one sort of flagship property in the company called the 40 Mile, which is a very high-grade silver lead zinc deposit. It averages about 18% zinc. A good grade for zinc is considered to be about...
In Alaska?
In Alaska.
How far is it from
infrastructures?
And
I think the challenge, it's not going to be a big mine. It won't be sort of $1 billion operation. It could be sort of in the $150 million range. So you have to bear that in mind when you talk about infrastructure, because we're close to a road, which is always key. There's two things you need in the mining industry, especially for base metal. One is power. Power would be an issue here. Now the grade is high enough where you might be able to use diesel, for instance, to support a mine of that size, predicated on the amount of cash flow it would produce based on that grade. And the other thing is how can you get your concentrates to a smelter, and the smelters are mainly in Asia for this particular, in Alaska. So we would have to get it on the highway to Railhead, which is about 2.5 hours away. And from there, once we're on Tidewater, we can go anywhere in the world for a similar cost. So not bad, to answer your question. The infrastructure is okay. By Alaska standards, it's good.
Okay, and what about the community out there? Because in some place, in some area, there's always the First Nations that are there on those territories, and how is it going with them?
Well, Alaska's a little bit different than Canada when it comes to First Nations. They settled their land claims in 1972. In fact, the property that we're leasing from a native band, Doyon Corporation, which I believe they're Fortune 500 companies. Very sophisticated. The CEO is a Doyon shareholder himself. He's a lawyer from University of Washington that's got his MBA from Stanford. It's like dealing with a major company when you deal with the native corporations. Very good partners. They want to see these properties advanced on their lands. They want to see business and development if it's done properly. We're in a region that doesn't have salmon streams. That's key. In Alaska, salmon is key. For the Alaskans, and it's tougher to permit, and we're on the eastern side of the state, and bearing in mind that Alaska is roughly the size of Quebec.
Yeah.
So it's a big place, but we're not on the ocean, so you don't impact the cruise ship industry. So for me to say that there's no permitting problems is disingenuous. In the mining industry, anywhere in the world now, you have permitting problems, but it's how you manage them, and they're certainly manageable in our opinion.
So are you, do you have a 43-101 in plan to come?
We're in the process. I think we're going to do a drill program this year, and then we'll do a 43-101 program to follow it. And that'll give us sort of a benchmark of where we sit. In my opinion, we're about halfway there to, I think, perhaps having an economic ore body, but you need to do the 43-101 studies and then a preliminary economic assessment before you could talk about the economics intelligently. But
do you have any tonnage so far?
It would be back in the net.
Or
we have between 2 and 3 million tons is just a guesstimate of that particular grade. Based on our location and infrastructure, I think we would need to double it. It's a type of system, though, with further drilling, I think could double it. If not, we could find other ore bodies close by. It's the type of geology that you tend to find more than one ore body. You tend to find eventually over time 3, 4, 5. So
does any other company exploiting zinc in the area?
Not close by. There are some other zinc opportunities located in the region that people are looking at. Don't forget the world's biggest zinc deposit is in Alaska, Red Dog, owned by Teck. But that's more in the northern region. So Alaska does have a history of producing some big zinc deposits. This one, I think, though, will be medium size and high grade.
And according to International Lead and Zinc Study Group, they said that stockpiles are growing. So, and you are bullish on the zinc. So, do you think it's true or not? Or
no, it's a fact. The stockpiles are growing short term, but I think once we have the supply kicking in, that'll diminish those stockpiles. But one of the things we look to in the zinc side is there's a couple things. The canary in the proverbial coal mine, I think, is your treatment charges that the smelters are charging companies, and those have been dropping over the last 12, 24 months, which indicates that there's some issues at the smelter level. The grades are dropping for them, so they're not finding the good concentrates that they need. But companies like Glencore, which controls roughly 60% of the zinc market, is stockpiling their own zinc, contrary to the other companies that think, okay, zinc is, the stockpiles are going up. They're adding to it for future strategic benefit. So short term, yes, there's some stockpiling going on and it's increasing the supply, but long term, I think we're going to be fine.
So what are the next plan? What could make the company now changing direction and attracting investors, do you think?
Well, you know what, I think there's a certain element of investors out there that are looking for good zinc companies. That the key thing is they're following management. The president CEO of Full Metal Zinc is a fellow named Steve Hayes. You know, he spent 14 years with Breakwater Resources, which was just bought out by NiStar for, I believe, $650 million. He's got development experience. He's the type of individual that's capable of building a zinc company. We expect to advance this particular project, 40 Mile, and we're in due diligence stage looking at several acquisitions that I think could significantly impact the value of the company. Having said that, in this market, sometimes no matter what you do, the stock's flat or, you know, in some cases goes down on good news. So,
but right now the market is not really favorable, not to make those 10 cents company to break out right now, because those that were up there are coming back down, so many of them.
Well,
and even in copper and everything is falling like a rock right now on the venture market.
You know, if I put on my corporate hat for a second, I don't mind markets like this because it allows companies like us who have the ability to raise capital and have a bit of acumen as far as what type of deposits will be economic or could be. We can make acquisitions that we wouldn't have been able to make in a more stronger market where everybody thinks they have a mine. I think in this case there's realization coming into this market. There's going to be some great opportunities for those of us that are capable of making acquisitions. So for a company like us, it's just getting over that initial hump, getting a little bit of critical mass, and then you could see us really add to the development side moving forward.
What type of financing are you looking at right now for this company to continue its expansion?
Well, we're doing a small financing. It's with strategic investors that like the space of zinc, like our management team. We're raising $1.5 million. We've just recently announced that, and we do have a strong order book moving forward, and we'll be marketing that over the next month or so.
Well, is it private money, or will it dilute the shares?
No, there will be some dilution, and we don't like doing it at 15 cents, but you have to weigh it. It's sort of relative, because there's acquisitions we can make now that we couldn't have made, but we would have had to make them, if we could have, at significantly higher dollars. So we can do it using our share capital moving forward at, you know, we're looking at some companies maybe with $2 or $3 million market caps, and, you know, we fully expect ours to be a lot higher shortly. We'll use that as leverage. So we will be suffering a little bit of dilution. You can't avoid it, and unfortunately, that's the name of the venture stock exchange.
But you're not looking after 25 and 50 million. The 1.5 million is not that much. How many outstanding share there is in this company?
33 million.
I mean,
33 million.
30. Oh, that's not very well diluted. We find a lot of 150 to 200 million shares.
Well, unfortunately, I think in this market, if you look in another 2 years, where we used to average, I think, around 22 million 10 years ago, and now it's probably up to around 40, 45. You'll be seeing Canadian companies with 100 million outstanding. Companies are financing at 5 and 4 cents. They're just getting desperate. And I don't think a lot of those companies, quite frankly, will be here in 2 years. They'll go by the wayside. Then they probably should.
But sooner or later, the economy will come back. Right now, we just see what we were expecting to see, the big sectors going down. But we just saw the gold rushing up again today. But so far, there's always a bottom of something. We'll always need resources. We'll always need copper, zinc, and nickel and everything, and it's just a matter of time.
Well, you know, I think I still strongly believe we're in a secular bull market for commodities. I just got back from Hong Kong at the Mines and Money show, and one of the interesting comments to come out of that show is China, if you look at their 5-year plan, and they've never missed a 5-year plan or even a 20-year plan, they still need to build up the western portion of the country. And to move people to have 65% in urban areas and 35% in rural areas, to meet that goal over the next 20 years, they need to build a Vancouver every month for the next 20 years, a Chicago every 3 months. That's the type of infrastructure that they're having to come forward, and we're just not finding these deposits quick enough. And when we do find them, they're, even at today's metal prices, but with the increase in costs, it's so tough to get into to build them. You know, there hasn't been too many big copper mines built in the last 20 years.
No. There's one big right now in Mongolia with
that's the first
A4A mines. That's a huge thing. I've been showing picture not long ago on it.
Fabulous deposit.
In the last few days, it is a huge thing.
But even if you look,
that shows you how China can be big, because they just bought the whole material coming out of that for years to come,
and built the railroad for it.
Yeah, and the power line.
And the power, yeah, that's what you almost have to have on a deposit of that size. That's a world-class ore body, and you know those come along about every 10 years, it seems.
Yeah. But you know, with today's technique, they might find some other. Do you have a look? Do you have an outlook on some other claims around your area? Because you said it's not a big mine, but and you seems like you may do some more prospection around.
Oh no, we've actually done a lot of work in the area. We do see some copper porphyry style mineralization, and this is one of the reasons the geologists are quite bullish on it. When you're looking at your geology in these regions, if you see more than one style, it's a good sign that you're in what we call a mining district. It's historic gold production, and in fact there was a gold deposit close by that we discovered at Underworld Resources. We put 28 million into the ground and sold it to Kinross Gold for 150 million. And
yeah, we had a couple of good successes.
There's some good successes, and that's close by.
That's what's interesting. So we do encourage people in looking at your website and everything to find the story about yours, because you've been involved with recent and good success. Unfortunately, that's all the time we had. And we want to thank you, Mr. Williams, for explaining us about your company, and we'll be following closely all of the story.
Appreciate it. Thanks for having me on.
Thank you very much.
Thank you.